Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis. This week's title is Gold Speaks Out Loud. The financial markets yesterday performed the worst sell-off in years and surely among the widest in decades. The sell-off affected many segments like global stock markets and commodities like oil. On the other hand, gold, even though briefly touched a new 7-year high, it corrected lower and followed the general market sentiment. This report aims to detail some of the most probable fundamental and economic news that could move gold's price in the next sessions, and also it will attempt to combine an explanation for the new yearly peak and the subsequent drop lower as it provides the ground for further discussion. We make a start with the geopolitical front that certainly affects the shiny metals price action due to its relation to risk and uncertainty. Yesterday in the Asian session, it was announced that North Korea had performed new ballistic missile tests. For some time now, North Korea has bragged over the development of its new military weapons. Analysts are divided between the ideas of the missile launches being part of a military exercise or that North Korea is trying to put extra pressure on the US during the difficult period they are already going through. North Korea is still facing sanctions ordered by the White House, and this may be leaving a bitter taste to the relationship of the two nations. Ballistic missile tests could increase geopolitical fear that could also be fueling gold's bulls and keep it on its toes as long as they persist. Also, major reaction could be expected by gold traders after many central banks and governments said they were planning stimulus actions to support their economies. For now, we focus more on the US as they will directly affect the US dollar, which gold's price relates to. Yesterday, US President Donald Trump stated that the US will be taking further action to boost the economy, adding also that a payroll tax cut could be a subject that he may discuss in the following days. From a bird's eye view, government stimulus could help currencies build strength as it boosts investors and consumers' confidence that eventually helps the economy. Furthermore, in the past days, we have also seen the greenback regaining some ground. However, from a gold trader perspective, this could be considered as bearish news for the precious metal as it means that some financial risk may be relieved. Also, we leave some room for the pre-mentioned news to be already priced in by the market as the large sell-off for gold's price yesterday may have been due to this reason. Yet the news could also be shrugged off by the market as the IMF and some analysts believe that the positive effects of a fiscal stimulus may need some time to show the needed results, so the problem may not be resolved immediately. As a general view of the virus outbreak in Europe and the US, the situation is taking up further negative outlooks by the media, and traders are tended to sense these. They have the tendencies to sense these kind of negative outlooks. On a more positive note, however, the situation in China seems to be stabilizing and victims have been steadily decreasing. This provides mixed signals for gold traders, and the news could lock gold in a sideways motion. As a conclusion, our opinion is that the market's reaction so far has been sloped to the negative side. The media seems to focus more on the negative, even though the positive could be as equally useful to traders. We would like to emphasize the pre-mentioned statement and add that the market sentiment could change in any second with a single headline, so caution is advised. Moving to our technical analysis, this is gold's 4-hour chart. Levels we have noted in a possible upward movement are the R1 1667, higher is the R2 1682, and our R3 is the 7-year high, which is also a round number level. That's the R3 700 level. Many analysts believe an upward movement has the potential of sending the metal through all the pre-mentioned levels, but in our opinion, this could happen gradually. In the opposite direction, if the selling continues, then the levels we have in mind are the S1 1652 line that was tested today but was not breached. Lower is the S2 1635 line that was tested in the first days of March. And even lower The precious metal could test the S3 1620 line. Below our chart, the RSI indicator is just running through the 50 level, displaying some ambiguity as we enter the US session. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. We will see you next week.